Mike Santoli, I'll come to you first in terms of where we finish, and just to what extent the yield move perhaps is what we should be focusing on more this week than these record closing highs. I guess another factor we haven't really talked about there, not only, of course, are we approaching the Jackson Hole symposium, but also quite a big move in European yields today, partly on some German political news. But we're seeing that kind of interlinking moves between global yields once again.
Yes, definitely. And the way I would characterize it is the bond market is relaxing and allowing yields to go higher globally, although the U.S. 10-year Treasury has had more of an upside in terms of yield than, for example, the German 10-year. So that spread is getting maybe a little bit on the higher side again. That sometimes, kind of restrains how much more the Treasury yield can go up. But I think it's part of the same story with what's going on with equities, which is investors are adding back some of the exposure to the economic recovery that they maybe had trimmed back and emphasized other things like secular growth stocks in July and into August. And, that's been kind of underscored by some of the work that the Wall Street firms have talked about with hedge fund positioning. Looks like they are all crowded back into FANG type and growth stocks and defensives. And now it really seems like a portfolio rebalancing as Delta recedes, as a, front and center fear in terms of the surge, at least in the short term. Just really kind of adding back some of those cyclicals that they had trimmed before.
So what is the right strategy, Lindsay, as far as how much you should be in the cyclical trades, the names that are working this week and today especially, and more defensive groups like a Staples or utilities or healthcare, which had been shining lately and are under a lot of pressure today?
Yeah, it's a great question, Sarah. I think what you need to do is have a little bit of everything. So a lot of people talk about that barbell approach. So on the defensive side, you want some of those, the healthcare and utility names that you said have been shining over the last 2 months, might be a little bit weak today. Along in that defensive bucket, I would actually put technology too. It's a huge component of the index. You can't really ignore the sector. And then on the other side of that, of course, look at the cyclicals and some of the value-oriented sectors like the financial that you see shine in periods where the 10-year starts to pop and people feel a little more comfortable about the reopening story coming back, especially after some of those sectors have been beat down. So there's a back and forth between a push and pull between all this that we've seen happening for the last 12 months.
Brent, as we await a number of earnings from stocks you cover to come out, I just wondered what you felt overall about valuations in those companies and how closely you're watching Jackson Hole and the yields that we're seeing, particularly on the long end, as to how you come up with the price targets for your stocks.
Yeah, technology is not built equally. Software is expensive. We have stocks at like Snowflake at 50 times revenue. And then we have companies like Google who are trading at 15 times EBITDA. So I'd say it's not even across tech. Internet is, in our opinion, more favorably valued. You continue to see, great support on valuations. In software, again, I think you're dealing with multiples we've never seen before. And ultimately, that's being underpinned by private equity activity. What you heard yesterday from Orlando Bravo, Tomo Bravo, right? There's an incredible resurgence. What's going on in SaaS, and in many of these multiples, in our opinion, are at points where it's going to be tough to go higher. Last year, you had a 56% increase in multiples in software, and this year you have a 3% contraction. So we're in a contracting multiple environment, but there's great fundamental stories like Salesforce, like Adobe, Microsoft, Intuit, are great, 4 large cap names we've continued to recommend to our clients. So overall, pretty mixed.
I was going to say, who looks most vulnerable in that setup to you?
I think, when you look at the higher multiple names like a Snowflake, I mean, it's just hard to win when you're at 50 times revenue. It's a great story. We think the management team's phenomenal and the product's incredible. But when you start to put multiples like that, it's just really hard for these 40, 50 multiple names to continue. We'll get Snowflake's numbers here in a minute, but I think ultimately it doesn't really matter what numbers put up. It's hard to go beyond a ceiling of 50 on the multiple. So in certain stories, I think we're going to see multiple contraction.